Inflation is a very serious subject. You can argue it's the way democracies die. So it's a huge danger.
We should prepare for the impending massive inflation, according to Charlie Munger. What should you do in the stock market when there's a lot of inflation, and how to develop investing strategies? So make sure to stay tuned until the end to find out. Let's take a closer look. Legendary investor Charlie Munger discussed the high stakes of increasing inflation in the United States in an exclusive discussion with Yahoo Finance editor-in-chief Andy Serwer on Wednesday. Inflation is a really important problem. You could argue it's the way democracies die, Munger remarked, citing instances ranging from the Roman Republic to Adolf Hitler to Latin America. He points out that finally, the whole damn Roman Empire crumbled as a result of years of inflation, and that the current situation is the worst long-range danger we have, save from nuclear war. According to the Bureau of Labor Statistics' latest Consumer Price Index or CPI data, U.S. inflation accelerated in January to its highest level in 40 years, with prices rising across a wide variety of products and services. The 7.5% annual increase in January, which was fueled by increased demand and persisting supply chain disruptions, was a significant increase above the 7% increase witnessed in December. Berkshire Hathaway's vice chairman Munger is 98 years old. Warren Buffett, the world-famous investor who serves as chairman and chief executive, has long headed the corporation, which is headquartered in Omaha, Nebraska. Greg Abel was named as Buffett's successor at Berkshire Hathaway's 2021 annual meeting. Buffett will step down in 2021. Later that day, at the annual meeting at the Daily Journal Corporation, Munger's publishing and technology firm, he expounded on his inflation remarks, saying that he didn't know how it would all play out in the United States, but that we're flirting with big disaster. He cited numerous historical instances, including Greek city-states and Japan, as another example of a country that was severely hampered by inflation mismanagement, but is now still living as a civilized nation. Munger gently questioned the U.S. government's response to rising inflation during the conversation, pointing to a pandemic response that was bigger than it's ever been before in the history of the United States. The influx of cash into the economy by both Congress and the Federal Reserve likely saved the economy while also being a factor behind the current high prices, according to experts ranging from the head of the US CBO to others. In addition to factors such as supply chain snarls and pent-up demand, expenditure is a factor. Some on the left say that businesses are taking advantage of the situation to price gouge and raise prices even higher. Looking back, Munger believes the government probably overdid it a little, throwing so many money so quickly that it's difficult for eateries to find employees to do the work. Munger appeared to be repeating some concerns that a plethora of government assistance, such as the recently expired enhanced child tax credit or a moratorium on student loans, has caused some to believe that workers may be hesitant to return to work. But, Munger remarked of the government's response, "I don't criticize it. It's difficult to make these decisions when you're under duress." Munger believes that inflation will continue to rise in the coming decades, and he cautioned anyone considering investing in currency for the long term. "I believe the fair assumption for an investment is that the currency would depreciate to zero over the next 100 years. He stated, "That's what I'm working on." Furthermore, Berkshire Hathaway's annual meeting, which handles all of Buffett's assets, is regarded as a mini MBA class due to Buffett and company's combined wisdom. This year's event, which took place on Saturday, was no exception. Buffett once again condemned Bitcoin, claiming that today's market is nearly a mania of speculation, and revealing how he spent a large portion of the $147 billion cash he had in February. Here are a few crucial points to remember. When the rest of the world was pondering the implications of the war in Ukraine, Buffett figured out the best way to put his capital to work. This was in contrast to his annual letter to shareholders, in which he complained that there were no excellent investment options available. During that time, Berkshire purchased more than $51 billion in stocks, including significant stakes in Chevron, HP, and Occidental. In March, Buffett purchased 14% of oil major Occidental Petroleum for more than $7 billion in 2 weeks. He also raised his investment in Activision Blizzard, which is being acquired by Microsoft, and paid $11.6 billion for the Allegheny insurance giant. During this time, there were other investments that were not revealed. The stock purchases at the start of the year are a dramatic contrast to his stock sales of $7.4 billion in 2021. The stock market has become nearly a craze of speculation, according to Munger, who's 98 years old. He made a passing reference to the fact that there are more people trading today than ever before. He underlined that even computers compete with one another. Munger explained, "We have computers with algorithms trading against other computers. We've got folks who don't know anything about stocks getting advice from stockbrokers who don't know anything about stocks." He claimed that it was more of a commission-based game for the brokers. When traders make speculative bets, they usually make more money than when investors buy for the long term. Right-hand man of Warren Buffett, Munger has stated that placing Bitcoin in one's retirement account is a bad idea. When your friendly advisor suggests you put all your money into Bitcoin because you have your own retirement account, just say no, he said. This comes on the heels of reports that Fidelity Investments is allowing investors to put Bitcoin into their 401k, a popular retirement savings plan in the United States. Fidelity is the largest retirement plan provider in the United States with $11.3 trillion in assets under management. Rising inflation is a major concern for practically everyone, according to both Buffett and Munger. They said that inflation will have a broader impact, swindling businesses, equity investors, bond investors, and even people who hide their money under their beds. Companies won't be able to tackle this problem by just boosting the prices of the commodities they sell. They'll also need more cash, according to Buffett and Munger. Buffett stated that investing in one's own skills was the best way to protect against inflation. In several nations, inflation has surpassed all-time highs, owing to money created by central banks to combat the pandemic-induced slowdown. Buffett, on the other hand, had all praise for Jerome Powell, whom he described as a hero who did what he had to be done. Savings are frequently assumed to be sufficient when it's insufficient. Investing allows you to stretch your funds a little further and turn them into an asset that appreciates in value over time. This, however, only occurs when investing is done correctly. In a fight against inflation, even if you invest in tools that pay a lower rate of interest than inflation, your investment will still fail. Alternatively, if you can increase your savings returns with the correct investment tools, you can keep up with inflation and have extra cash after paying your expenditures. Investing in stocks can help you beat inflation and reduce the dangers associated with it. ETFs can also help diversify and add value to your investing portfolio. Risks are spread out over numerous investment possibilities in a diversified portfolio, so if one fails, you have a variety of backup options. Debt investments have long been thought to be a good alternative to fixed deposits since they provide consistent returns while also protecting against market volatility. As a result, these also add value to your investment portfolio. If you're thinking about sticking to fixed return investment alternatives, keep in mind that not allowing your funds to grow puts their value at danger because they won't be able to keep up with inflation. It's critical to avoid letting myths and irrational concerns dictate your investment decisions. Furthermore, you must logically examine your financial requirements in terms of your wants and income, and then determine your investing path based on those evaluations. While we all begin somewhere, it's only human to require assistance from time to time. So if you're confused about how to go about organizing your investments to fight inflation, it's a good idea to hire an expert to assist you. A professional financial advisor can help you put your money to the greatest possible use, ensuring that you can do more than just keep up with rising lifestyle expenditures and build wealth. Understanding inflation and how it affects your money is the first step toward beating it. Remember that keeping track of your costs, savings, and assets on a regular basis will help you retain financial discipline. Finally, remain constant in your financial planning for the future, and striving to protect your funds from inflation. So that brings an end for today's video. Thanks for watching. If you enjoyed it, please like, share, and subscribe to our channel for more such great content.